Reduce. Reduce. A lot of people think it's that mindset of like you always got to be in a trade, right? And if you're not in a trade, you're not a trader. Like most trading is waiting. And if you're not patient, you will pay until you are. And that means you will lose money. So I think today has been a great day for me to come out on top. And I'm probably not going to take any more trades today because I don't want to give it back. Don't give it back, right? Secure the bag. Don't overtrade. So that's kind of where I'm at right now. If we're looking at the charts, we can go in. I always talk to you guys about environment and where we're at, right? Can anybody tell me what's going on in here, right? Can anybody tell me why is price action so crazy here? Okay, and I'll answer it for you because I don't expect you guys to. So you can see how up, down, all around. You can see how nice price action was moving down here before we got into this area that I just drew out, right? You can see how nice, right? Carry trade. Carry trade's expected tonight, right? But the thing is where we are right now, if we zoom out, which we should always be doing. I'll keep my little lines in here, right? If we go into this range, let's go into a 1 hour. You can see in this area here, yesterday especially, we do not have a lot of price action. Okay, so if I go and I pull volume across here, you don't have to be a rocket scientist or an architect to know that price in this area has not kind of established data, right? We don't have data in this area. This is why it's so important to do a top-down analysis. Because yesterday, if you didn't understand that this area moves really fast, because price will stay in here, but then it'll shoot through here, right? And then it'll stay in here, and then it'll shoot through here, right? Bart Simpson. We can see lots of Barts in here, right? So if we are starting to put a little bit of volume in here, is it as much as this guy or this guy? No, we have a gap, right? So in this area, you can expect price action to be quite unpredictable, janky, volatile, indecisive, disrespecting your TA. Okay? So in that idea, if we have that idea, we understand there's liquidity in the high, there's liquidity below us. Okay? And we have some bullish inflation news. Low inflation, right? So what can we expect today? Well, they're going to wreck the leverage, right? Right? They're going to wreck the leverage. Right? Yesterday they wrecked everybody. Unless you knew what you're doing. So when we zoom in here, we can see that today we had the breakout, continuation out. I got long here for a little slap, order block retest. Okay. I also got long off the momentum break here, continuation up into my resistance level here, and no more trades. So you can see that today has not been very simple, especially with the bullish news that we got. It has really just trapped a bunch of traders in here, and then it's going to make a decision whether up or down. Okay. So if this, then that. Now, the key here is when we look at this bigger picture, we were in discount down here. So we were in discount, and we moved up, but we've created a lot of liquidity down in here that we should be aware of, right? Whenever you get this sort of rounded price action here, you don't get stair-stepping higher and higher. It's more rounded. That's how you get cup and handles and stuff like that. This is typically, these lows in here are looking to be targeted. If we're going to break down double top, I mean, it's very possible because we're overextended. There hasn't been a sufficient liquidity sweep anywhere in here to come back for the late longs. People are long in here, right? So their stop losses are all throughout this area in here, right? That's why you have events like this that come and grab both sides. So for now, we've come up back to these guys here in balance. Perfect. We're in a very janky, choppy area. We have the Japan carry trade tonight at 10 p.m., I believe. And we have liquidity below us, and we have liquidity above us, and a point of control resistance, and a support level down here. My bet, we come here. That's just my bet. That doesn't mean I'm trading it exactly. Thank you. My wife brought me coffee. Thank you, sweetheart. Sweetheart. She said, don't sweetheart me. Little man wants to hang out too. So for me right now, double top, looking to rotate to the lows. Okay, so no, for me right now, I'm not in any trades. I'm just going to be patient here and see what materializes. This is a slow bleed down. We can see the NASDAQ overextended right now. S&P 500 overextended, big gap up this morning. So that typically looks to get filled, right? Bitcoin leading the way down. I think we have VWAP right here. I think so. It should be somewhere around here. This is down only 2, right? So we're looking for a momentum break to the downside here. Yeah, look at that. Perfect. Are you charting the Nikkei? Yeah, I haven't been charting it one way. I typically don't look at the net. I don't even know how to pronounce it. Nikkei. We'll just call it Nike, okay? I'll have to ask ChatGPT how to pronounce it. Japan stock market. So we'll see. Cheap money is not so cheap anymore. That's what we know. We'll see if we continue here, but yeah, no trade for me right now. Just waiting, especially for data that's coming out this evening. Highly manipulated market, so a little bit of patience in here, guys. That would be my non-financial advice. What are you looking at, OC?
Oh, I'm actually into 2 trades right now. But let's bring them up.
Oh, you're a degen.
A little bit. Before we go over that one, guys, remember exactly what Alex mentioned. We have very important data, Japan's carry trade that could be leading to a big dump. So be careful. And if you're going to be trading, remember to use a stop loss, lower your leverage, lower the amount of money that you're risking in the markets, not financial advice. All right. Let me bring up couple of things in here. Let me get started first with this. I've been using this tool lately. I really, really like it. And I keep it on the 15 minutes. The 15 minutes is giving me kind of like a right now sensation of what's happening in the markets, right? Very important. If you're going to be using this in the 15 minutes, remember to refresh. Because if you don't manually refresh, this thing's going to get stuck on whatever it is, right? And then it's going to give you wrong data. So what are we seeing here? First, short closing. All right. So short closing is not the same as long entries. That's very different. Why? Because short closing, most likely they are getting wrecked. All right. So shorts got wrecked. Then long closing, longs getting wrecked. Right. Then long entries. All right. This is where we start looking at. So how many long entries? How many people are not longing but might be buying the top? All right. In short entries, how many guys are entering that? Entering for shorts, right? Very important when we have a this period in the market. So we break the equilibrium. The market usually tends to find the equilibrium. Another important factor in finding that quote unquote equilibrium, it's market makers, especially going into the weekend, because, well, this is some juicy short money that they can take, right? Especially over leveraged people. So I tend to use this as a counter indicator, right? So if I see a lot of short closings, well, I think we're going to be moving upwards, right? If I also see a lot of long entries, I think we're going to be, sorry, moving downwards. So I will say that at this point, we could be seeing just slightly bit move to the upside and then to the downside. Remember, this is the 15 minutes. You can also zoom in and start looking to, hey, where is your favorite coin in here? Like, for example, Zen. Most likely, Zen users got wrecked because they're in the short closing. All right. Or even you can go right here at the top right to something like the 4 hours and give you more like a, I don't know, a 3 hours sentiment. And I usually tend to look at something more faster, right? All right. So, but it's still the same. Look at how many short closings there are. All right. So now let's go and take a look at what I have done and what is the next possible movement. One of my entries was ADA. Very important. We set an ADA entry or alert in here, and I was expecting it to even swipe down harder. I think it still can swipe down harder. All right. But nonetheless, I already see, and let's bring up my classical oscillator. And this is it. Well, the plus oscillator. I already have a flip of the ribbon. I already have a reversal. And remember that we were talking about the bright spot in here. Not only that, I also have a up reversal from our new reversal segments. All right. So this is giving me the chance to maybe enter for a small long. All right. And also remember that we need to look at our horizontal line, our zero line. I'm just going to drop anything there, make it 0, click OK, right click it, and lock it. Things that are against that long. First of all, look at your money flow. Your money flow is actually going lower. All right. Your prime score, it's going lower. And your consolidation score, it's at 8, almost about to break consolidation, which means that most likely we're going to be doing something like this and break down based on the consolidation, right? Based on the money flow. I think that we might just push just a little bit and then go back down, right? But nevertheless, I was looking for this pivot. Okay. Why? We have a bunch of supports. It didn't quite hit it. That's why I did not got it. And the spike was very, very close. And let's zoom in just so you can see why and how I decided to jump in. I front run the indicators and in a way, not quite a truth, but in a way, chase after the entry. All right. I would say that this was a mistake. In fact, I'm already profitable, but it's not something that if you're starting, you should be doing. All right. So I already have the bright spot right down here. I have the reversal, flip the ribbon, almost everything for a long, right? And well, I usually tend to wait for last confirmation, which is breaking through that zero line. So I did not wait it for that. I saw it bouncing back up on the next candle right here. And that on the next candle, look at that. It was 2 candles after the flip of the ribbon, 2 candles after the up reversal, and 1 candle or a candle close of up reversal. Not only that, if I look at my VMP oscillator, NVP oscillator, I see that I'm pretty low. Usually that indicates that most likely I'm going to have just a slight movement to the upside, right? Nothing serious. If I bring up my come on, what is the name of this? Linear regression oscillator, I will also see, there it goes, that the bearishness is pushing upwards into the bullishness, right? So if front running this and also having some loss of strength, that's the ADX, right? The ADX losing strength on the bearishness, all right? So what happens when you lose strength in the bearishness? The price goes slightly higher. This is not a Valhalla trade. Although initially, yesterday, I have more bullish sentiments in here and more bullish setups, right? So I was thinking, hey, you know what? We could be reaching out somewhere around dynamic reactor. At this point, since we're pretty bearish, I'm just thinking to hit that trend line, especially now that we have the possible going carry trade. So be careful here. Despite this is not such a great or an amazing gain, it is what at this point the market have given me, right? And here's what I would suggest, because this is not financial advice, to take whatever the market gives you, right? If this for your trading style represents, I don't know, $5, all right, at this point, take those $5, right? Or would you rather have a stop loss of those $5 to $10, maybe? I don't know. I ask you, right? So another opportunity or another thing that you can do, it is, and I'm gonna be doing that on the maybe next upcoming candle. It's gonna be moving my stop to entry to avoid losing and taking half of my gains in here, right? So for me, it's gonna be somewhere around $75, something like that. Not too much, but still, it's gonna be $75, and I'm still gonna leave another $75 in, right, and move my stop to entry just in case the carry trades already have been discounted here, which that's what I'm kind of like counting with. All right, but counting with doesn't mean that is going to happen. All right, and we should opt to the dynamic reactor. If that is the case, I'm still already 50% out and 50% in. Therefore, I have an equilibrium between managing my risk, which at this point will be almost negligible risk, right? And well, living in Moonback in case I have a very profitable trade. All right. So those are a couple of things. Another one that I'm already in here, it is BNB, right? We were talking about this area of entry right here, and I decided to jump back in as we had that flip of the ribbon, right? I did not enter immediately. I entered almost at the end of this candle, a little bit lower than what is shown in here, but I just wanted to leave it as is to actually show you where we left things out. All right, so I have just a little bit of a better entry here, and of course at this point I'm looking, there it is, for this oscillator to go up to the zero line. Let's actually put in here our zero line, double click it, zero, all right, click away, okay, right click and lock it. And what I'm expecting to see, it's something like that, a rejection on that zero line. Whether if it's a rejection and then acceptance, I don't really care. What I right now care, it is being safe, right? So as you can see, I'm almost an entry, basically nothing to be saved out of that trade. And I have two options in here. One, take whatever it gives me, right? Which is going to be almost barely covering for fees, or just wait and see if I get stopped out. What I'm expecting on this area, because of the amount of support that we have, and for that support, we need to bring up our indicators. Let's go for it. Again, I'm going to be just adding everything at once, so the loading time is less, all right? So there it is. We have a pretty strong support with a predictive range, a strong area of support, which had hold or held for 1, 2, 3, 4, 5 area or bounces right there, right? So I believe that we could be looking at a range, especially since our loud order block at the top is highly bullish now, right? So what does that mean, and how will that make a difference on the price action? When you have a resistance, because a loud order block at the top is a resistance, right? Don't make the mistake thinking that because you have a high bullishness on that order block, it's going to be some sort of support. No, it is a resistance. All right. So the difference is the strength in which this resistance pushes the price lower. All right. So that's why I'm expecting to have some ranging here, since the resistance at the top, despite it's still formidable, it doesn't have the strength to push the price action very, very, very low, right? So I'm thinking that it's going to be counteract but our support until it makes a range, and maybe we start canceling out pieces of that bear scenario. When this is gone, most likely the bullish right here are going to be still not trading until we have a breakout retest continuation. But that means when there's basically no bearishness, that is going to be easier to go through that resistance. But you might be seeing something slightly different here, which is, why am I then pushing lower, right? If I'm saying that we could be looking at a breakthrough. And that is because there's not only the loud order block, but we also have a trend line in here, right? This is my manual trend line. And right here on gray, you can see the automated trend line. So let's actually fix it to be exactly the same as the automated trend line by ChartPrime, right? So the trend line is the actual thing that I'm afraid of that will be acting against that trade, all right? So still, right now, I'm just leaving it for the second. I'm going to be trying to close as closer as I can from what I believe it's going to be a little range again, all right? So I'm going to be closing 50% in here and leaving my stop as is. In case this just goes to the next entry, it's going to take me out almost at breaking even. All right, so that is the update on BNB. Still waiting for a resolution on what might happen here. But if not, I think that's, I mean, if we don't get rejection right now, if we just range, I believe that we're going to be having some ticking bomb and then maybe seeing some results in here. You can also see that if we start crossing back again and doing something like this, all right, or having a rejection on the top, right? And hitting that trend line, I believe that we're going to be going even lower. And that's somewhere I'm looking for my next short entry. So we'll see if the timing plays out. Remember, it's very important to keep track on what's going on in here. And well, then take a look at what's going on. Geras, even though if it's 100% bull, I don't think that we have 100% bullish loud order blocks as resistances, but if you do, it's still a resistance, easy to break above, all right? And most likely you might be missing a support and resistance. And remember, 100% don't always mean zero, absolute zero shorts, all right? And that has to do with decimal points and how percentages work. So that's why when you see, for example, 0% sugar, right? And then you turn it around, it says 2 grams of sugar. And you go like I'm talking about food, right? So you go get a 0% sugar chocolate. You turn it around, it says, like a gram, 1 gram, half of a gram of sugar, right? And this is, wasn't it 0%? Well, by volume, it's a 0%, right? But by actual sugar is not. The same thing happened here, right? You're looking at percentages because it's the closest thing that you can compare one to another because it's relative. But that also means that when you have a lower percentage, well, you might have just a little bit more of what you expect on a maybe 2010 or 0%, quote unquote 0% bullish or bearish, right? Like, for example, right in here. And I think this is something that we're going to be looking, or that's something that we're going to be perceiving much in many cases, like this. For example, take a look at this one here, 90%, but it's not 100%. And then you have, of course, a 10. Here is a 10%, right? But yeah, let me see. Fuck yeah, that's how I like my coffee, with just a little bit of sugar.
Yeah.
Yes. All right. So no, not anymore, but I used to. So yeah, that's what I'm looking at BNB. So I just wanted to give you guys the warning in here. All right. And the strategy is basically the same as Cardano. I'm gonna try to leave it as much as I can. I'm gonna be managing my stop loss, and I'm gonna be taking 50% out as close as I can to the loud order block, moving my stop and entry as I get at the top, and taking 50% out and leaving that little moon back in case, just in case, the market has already factored in the carry trade bearishness in here, right? But again, remember, couple of previous carry trades we had. You showed that yesterday, Alex, didn't you? Something like a 30% drawdown.
Yeah,
Something like
that
that.
was
Something
bad.
crazy. It was bad. Yes,
And it lags too, so it takes time to kind of.
to kick in.
It
Yes,
it looks okay, and then
it's not okay.
it's not okay.
Yes. Let me go over a couple of other coins in here that I'm looking at. Again, guys, I mean, I don't want to push buys at these zones, but I want you to know what am I looking at. Okay. And one of those, it is virtuals. All right, virtuals. What's going on with
Oh,
virtuals?
he's joined. He's joined the. He's joined the company of kings.
kind of. Not that much.
It's a beautiful stiletto pattern, bro.
It is. It is. That's what I'm actually kind of looking at. Not, I mean, to be honest, I was not looking at this little pattern. Now that you see it, oh, I have that bright moment, right? That you said, yes, it
Go
is.
on the daily.
Let's get to the daily.
Go on the daily.
Oh, is that like a huge one, right?
Yeah, man.
Look at that. Holy Jesus. Oh, the only thing that is worrying me is this area of
Now,
liquidity. A little bit. So
yeah, but that's the Binance Wick bullshit.
yes, it is. It is. It is. So here's what I was saying. All right, a possible Wyckoff reversal or accumulation zone. Right. So we have the ranging here, or the little range. We have kind of like a V-shaped recovery in 2 steps. Right. Or this is a V-shaped recovery. Still not clear. That's why I pushed like a ranging here. And since this is big resistance, in what's up with the mosquitoes today? Holy shit! All right.
They're coming for you, bro. It's because you drank too much sugar in your coffee. They can taste your blood.
True story, brother. True story. That's actually something that happens. Like a magnet. So liquidity will draw price. Yes, exactly. Exactly. Thank you, Gare. Thank you, my friend. Yes, like a magnet. So here's the thing, right? We have, and let me zoom out in here, a huge area of support. Right? And I mean, if we lose this area of support, well, the next area of support is going to be 0.51. All right. So losing this zone will actually tell traders, you know what, we are pretty low, and we might think of doing something like that, right? So what I want to see is the next pump to the trend line in here that we have right there. Oh, let me actually do it professionally. Well, a little bit more professional, right? But with that is marked by our automated trend line detection, all right, system, like that. And if I bounce out of this and I hold this support, I also want to be breaking back and forth in this zone. Another important thing that I'm seeing here, look at your money flow, right? I mean, just a couple of hours ago, we did had a little bit of a better money flow reaction. We start pushing upwards. Right now, I see just a little flatness, but we had kind of like a pushing upwards on that money flow. And look at your volumetrics. This is a clear indication that we have slow money coming in, slow and steady, right? While we're lacking of money flow speed, right? But we have that volume to back this up, which means a stronger support zone. All right, it's still not in the green, but it's working its way up there. So what I'm looking or expecting is first that flip of the real, which we already had it. All right, so I was too slow to take this trade. If not, I would have been already in another trade. So since my opportunity is gone, I'm just not gonna be hitting on my chest, right? I'm just gonna be looking to, hey, what is the next possible opportunity? My next possible opportunity is gonna be a short in here, right? And then a long in here and manage my risk. Something important is that if I'm already predicting or forecasting a possible range scenario, my strategy is going to be hedging, but giving a possible long a better opportunity. What am I going to be hedging? Because I still want to look for a possible spring right there, right? So if I can shorten and then the thing goes like this, well, perfect. I mean, I'll be making an extra buck, right? So that's what I'm looking at here. In fact, I already had hit a couple of alerts. So that's what I told you. Like, I've been a little slow to be taking that. And I'm going to add another alert just to be, or to try to catch the next upcoming or possible short. And again, within a range that I'm perceiving in here. So that's what I'm looking at. I also have a couple of other things like H bar crossing a support area that I was looking at. All right. So we have a support taken. And in H bar, I mean, I'm already not going to be over trading. Still, I'm going to be looking at it. And If I break out, I know this is gonna feel like, hey, I should have longed it, but don't worry. I'm gonna be then shorting it from here, longing it once again, and shorting it and trying to get this movement. All right. So this is gonna be my no trading zone. This next possible movement to the upside is pointing upwards, but still below that zero line. When would I change my mind? If I start breaking to the upside right here above that zero line on my oscillator. But so far, pretty bearish, about to break the range. So yeah, that's what I'm looking at today. And I also want to say that I'm not really gonna be trading much today. I might be more inclined to start trading it tomorrow and possibly catching some shorts after what I do expect to be a day of some choppiness and longiness. I don't know if that exists, but I just made it up on today. So yeah, by seeing Alex's face, I know that doesn't exist.
You're good.
I'm good. Thank you. Thank you. All right. So, any questions so far, or anything that you guys are wondering? Any questions about indicators? Any questions about anything? Let us know. We're here for you guys.
Lucidius asked about liquidity, and what the easiest way to think about what liquidity is, it's where people's stop losses are, right? So where are the most amount of people in trades, and where are their stops, and the market is going to naturally gravitate to those areas. So when you have a whole bunch of people who are longing and the price gets overextended, price is naturally going to come back to get some of that leverage out of the market, right? Because there's a lot of leverage in crypto and in Bitcoin. So, like us, people trading with high leverage, right? So, the market maker doesn't like setting price all the way up when he's got all these leverage longs in a position, right? It would rather balance the books. So, it will send it up, trap the traders, come back down, grab the traders, send it back up, and that's how you get the price action. So you always want to kind of identify where the liquidity is, and that should be your target zone. And then it's interpreting price action and market structure, and using our tools to kind of attack those areas, right? And by doing that, I've found a lot of success. I always identify where the liquidity is and how we're going to get there, and by doing that, I'm able to position my trades accordingly, and manage risk, right? Because if I know um, there's some sort of structure where to put my stop loss. I know where to put all my targets and my take profits, right? And that liquidity identifying that will help you navigate the charts.
Absolutely. I see Lucius typing, "What is up, brother?" Let me know if you have any questions. Look at that. They brought you coffee. They brought me healthy food, and this is a pretty good one.
Oh yeah.
Yeah.
I don't feel good, so my wife's being nice to me.
Great. Love it. Love it. Nice. What would the
What is
premium?
with the premium? Equilibrium and discount zones. So you can think of that as your high, middle, and lows, and that's going to give you a range, depending on the time frame you're on, right? So that I find that works best, GER with predictive ranges as like a combo. So if we're looking at Bitcoin here, and we put on, let me pull up my screen quickly here for you, and we put it on, I think it's this one. Is it this one? Yeah. Okay, so it's going to be time frame specific, right? So you have your discount, equilibrium, and premium, right? So it's defined your range, and then you use your predictive ranges within that to kind of define your support and resistance levels throughout, right? Depending on the time frame you're on. So if we're on a 1 hour time frame, it's obviously going to be a much larger area, right? So your premium's probably up here, your equilibrium's probably here, and then your discount. Yeah, there you go, right? So it's buy low, sell high, because we're range bound most of the time, right? And then you can obviously shrink it down, right? It's just a way to kind of divide your chart, right? And it's going to allow you to understand when you're overextended to the downside. It's basically, overbought, oversold with the confluence of ranges, right? So you could see yesterday, if you're down here yesterday, right, we could see that we're pretty overextended to the downside, right? So you could say that, hey, we got a new predictive range in here, right? So now we're down at the lows and discount. We have a change in character. We're looking to rotate back up to the equilibrium, or the blue line, which is the middle of your predictive ranges. So that's the middle here, yellow, gray. You can see how well it's worked this morning, right? So the gray getting called out here, right? Coming right back down to the yellow. If we're going to drop again, we'll probably come down to the blue, right? But we're holding the equilibrium right now. Now, if you want to be in a tighter range, you just drop your time zone, right? So you can go to the 5 minute here, and it'll give you probably your high. It'll probably give you a low in here and your equilibrium. Okay. And you can see your previous one as well. Okay. And you're able to use it that way as well. It's good for like take profits and targets. Just understand the colors, right? So understand where, like if you're out on a 4 hour, it's going to be a big difference, right? But you understand your blue, you work off of the blue, okay? Overextended, right? And then you'll have your smart money. I guess it's smart money concepts, premium and discount and equilibrium, but yeah, it does it for you. Kind of defines your range.
So there's another question here. Settings. So you need to, well, what I do advise on the settings is to find the trends and turn on your dynamic reactor. Once you turn on the dynamic reactors, you just change the tuning to pair it when the price action breaks below dynamic reactor and then when it breaks above. So as long as you're in a sell, for example, a sell signal, then every retracement is good for a short. And then you rinse and repeat. So that way you're using your tuning of trendy to find trends. So it's not like there is a defined setting for those times in specific. That depends on how you perceive or what you perceive as a trend, which should not be the same as a trade. Also, predictive ranges change with break of structure, not directly. So it's not like if you have a break of structure, the predictive range is going to change. But when you have a break of structure, which is a continuation trade, you might have just breaking the barrier of the previous range. In that case, you need to recalculate, or predictive ranges auto recalculate its ranging. So they're not, let's just say, directly related, but because of what is a break of structure implies, which is volume, and if it just so happened to be at the border of a range, well, then predictive ranges may recalculate. But directly, the answer is no, they don't recalculate based on break of structure. All right, so I think that is the time that we have for today. Alex, thank you so much.
Yeah, have a great day, OC, and thank you everybody for being here.
Thank you, Alex. Hopefully you feel better and drink a lot of water.
Agua.
Agua, absolutely. All right, guys, thank you so much. And as always, see you guys tomorrow.